What is market geometry? So essentially, it refers to a trading style that uses geometric patterns to find an ideal setup. Okay, so it's very straightforward and simple. The patterns that we've previously looked at already. So we're looking at alternative patterns on these sessions going forward. We've looked at the triple top. We've covered the triple top and bottom, double bottom and double top. We've covered the rectangle, the bullish and bearish variants. And in today's session, we're going to be covering the flag pattern. And we're going to be going through the distinguishing factors and the things to look out for that make it that type of pattern. So let's get straight into this. Right, so as you can see in front of you guys, I've done a quick sort of demonstration of how the completed pattern would look. Okay, so this is the bullish continuation flag pattern, right? So with the bullish flag continuation pattern, it signals that the market is going to move higher because it's going to continue the current trend. So when we're looking for the flag patterns, we want to first establish the trend, okay? And then we want to try and identify which flag we're looking for. Is it the bearish or the bullish? In this instance, we're looking at the bullish one. So we're looking for an upward trend to start off with, okay? And with regards to the distinguishing factors, what makes the characteristics that the flag has. So the first one being a strong impulsive move, right? So that's the first thing that we'd be looking for. With a strong impulsive move, we're looking for, especially for a bullish continuation pattern or a bullish trend, we're looking for, fast, highly sort of volatile moves in the market, and to make sure we get that, just particularly to establish the pull of the flag. So it essentially means that the range of the candles are more bullish than usual. So you don't have any sort of ranging or any sort of consolidation in the market. You have a long straight sort of bullish movement in the market. So that's the first characteristic that we're looking for when we're looking for the flag pattern, the bullish pattern. The second part being so this then does form the pull of the flag, okay? And then the second part being after the strong impulsive move on the market, it will need to take a break at that point. So it will need to, retrace. So price consolidates after the strong impulsive move in the form of a retracement, right? So it's gonna form a range. And at that point, that's when we want to start, that's when we want to start looking for our entries, etc., and looking for the behavior of what this pattern is doing. So there are a few characteristics that we do need to go through before we start to get excited that, okay, is it a flag pattern? Is it not a flag pattern? So like you can see here, like I mentioned, it does consolidate and it does sort of retrace downwards. So it has a bit of a pullback, which forms the flag. And then once the pullback is completed, so again, it consists of the highs and lows, which are parallel to each other. And with the highs and lows, they do have their resistance and their support. So it's not your traditional sort of support and resistance. A lot of people look at support and resistance as though it's just a flat line or a particular sort of price level. But in this instance, you can see here that it does sort of, tilt downwards on the resistance and the support. And that's for the continuation for the pattern. So the tighter the sort of retracement is between the candles, the stronger the breakout will be. So there are a few, again, distinguishing factors to make sure that we have established that is a flag pattern that we're going to go through first. So the first one being that the flag itself, so the consolidation should never break past 50% of the pull, okay? So you could measure that through the ruler if you're using TradingView. It's a very easy way to do it. I can give a quick demonstration on a live pattern on a live market, should I say. So again, this is the first characteristic that we're looking for. So the 50%, it should never break past 50% of this pull that's formed. Okay, so that's the impulsive move. Perfect. So like I mentioned before, the tighter the consolidation, so sort of like the smaller the consolidation. If we think back to, I did a session on Fibonacci retracements. If anybody can pop in the chat if they remember the deep and shallow retracements and what they equate to, essentially. Does anybody recall what a shallow retracement equates to from the Fibonacci tool? So essentially, I'm just going to quickly answer it. So it essentially means that there'll be a stronger impulsive move continuation. So when you continue the trend from that retracement, so that's simply what it's saying here. It's that, you know, the tighter the consolidated range, meaning the shallower the retracement, you know, the more likely that the breakout is going to be a lot higher, a lot stronger. Perfect. When you're looking to enter, once you've got all of these sort of factors, so the pole has been created, you've got that consolidation, you've established that the support and resistance are parallel, the highs and the lows, and you've got the confirmation of that 50% that has not been broken for the pole, then you can look for that breakout. Once that breakout occurs, personally, on my trading style, I always look to enter on the retest, right? Which you don't have to do in this instance. You can enter on the breakout, but it's always good to enter on the retest because it means you get a better entry. If the impulsive move is very fast coming out of this to break out, which it would need to be, you know, more than likely you're going to get caught up in that impulsive move. Whereas if you're catching it on the retest, you know, you're getting a better entry at that point. Okay. So with regards to your stop loss and your take profit, the stop loss is similar to the previous patterns in that you're placing it below, you know, a support or resistance. So in this case, it is below the support. It gives it that bit of protection with regards to, you know, having that previous resistance to protect it, and again the support as well. So you're giving it sort of 2 points of like resistance before your stop loss gets hit. And then with regards to the take profit, you're measuring the pull of the flag pattern, okay? And what you want to do in this case is 50 pips, okay? So what you'd do is you would then calculate what 50 pips were from the entry point, okay? From the breakout point, sorry. So from the breakout, you'd count the 50 pips and then you'd set your take profit. And then that's simply how the flag pattern works. Does anybody have any questions about the flag pattern? I'm happy to go straight into a live demonstration on TradingView. If anybody has any questions, feel free to pop them in the chat. Perfect. So let's go straight to TradingView. So I've just picked USD Chef, CHF, the Swiss franc for this. I haven't really looked for a pattern in advance. They're really not too hard to find once, you know, you've got used to looking for these patterns. So what I'm trying to do now is I'm just looking for a similar sort of continuation in the pattern, so the bullish continuation. So let's have a look at this. Perfect. Can anybody tell me what we're looking for when we first start looking for the flag pattern? What's the first characteristic that we're looking for? Can anybody pop that in the chat? With regards to a time frame as well, you don't really need to be on a particular time frame. And these patterns, they can crop up on all time frames, so you don't need to be on a particular time frame. I am looking at this point here because that is quite a strong impulsive move. So I am looking at this part here. I might need to drop it down to a lower time frame just to understand the retracement here. I'm just wondering now if it did break that 50% rule. Let me have a look. So yeah, it does look like it did break that 50% rule. We take it higher. So the way I'm sort of looking at this is I'm taking the impulsive move, as you can see here, this impulsive move, right? I'm placing my ruler, and the way to calculate that 50% rule, it gives you the line automatically. So it gives you that line here as a 50%. And as you can see, price retraced all the way down here and broke that 50%, if everybody can see that. So let's move to another point. Let's have a look. This looks like an okay, although you don't really have too much range there. Let's have a look. So again, that looks like it's not really that good. This looks okay, this part here. So you've got your strong impulsive move to the upside, so we're looking for a bullish continuation. And you've got the small retracement here. If I drop it down to the 15 minutes, let's just go back to that. No, I've lost where I was. There it is. Okay. There it is. Have a look at this. That's strange. It looks a lot different. Unless it's this part here. Yeah, it's this part here. So you have a bit of a consolidation here for the flag, but it's not the ideal flag pattern. So look. Does have a few of the characteristics though. So if we go from the high, from the low to the high, again, if you see that it doesn't really break the 50%, this little retracement here. On the 1 hour, it looks a lot better with regards to being an actual flag pattern. So let's look for another one. There's probably a better one somewhere. A better demonstration. Okay, this looks like a good point. Similar sort of characteristics. So you have their strong impulsive move. And then you have that retracement, that small retracement. Then you have the breakout, the retest, and then it does slowly make its way up. So if we have a look at this, have a look at this one. This looks a lot better actually. Let me turn off the volume because it's kind of in the way. Perfect. So can anybody tell me what the first characteristic we're looking for when we're looking for the flag pattern, the bullish flag pattern? Can anybody pop in the chat what's the first thing that we're looking for? So it's pretty much the same with the harmonic patterns as well. The first sort of indication that we're looking for. Can anybody pop in the chat? Strong move, yeah, a strong move. But what sort of strong move are we looking for? Is it to the upside, downside? Are we trending up, down? Up, perfect. Yeah, good. So because we're looking for, we established the trend as a bullish trend, okay? So an upward trend. The pattern that we're looking for, the first sort of characteristic, we're looking for a strong impulsive move to the upside, right? So we've got our strong impulsive move here. Let's first establish. Okay, so let me just have a look. What's the second step that we do? So once we've established the impulsive move, which is here, just to make things a lot easier, what can we do straight after establishing that impulsive move? Just to make things easier for when we're identifying these patterns so that we don't waste time. What's the second thing that we can look for? So I've got the impulsive move. I've placed my ruler on there. Can anybody pop in the chat what's the second thing that we can look for? Just to save time so that we don't sort of waste any time looking for going through the rest of the move, drawing up, trying to draw up the flag pattern. Draw out the lines for the flag. Yeah, we can do that. However, if we do draw out the lines for the flag, right, what could happen is when we come to the other steps, that retracement of the flag, right, the consolidation, it could break past the 50%. So it's always good to, in my opinion, drop this ruler first on your impulsive move and then look for the retracement, right? Because if it breaks past that 50%, you're instantly just going to move away from it because then it's not valid, okay? Does that make sense to everyone? Why would we place the ruler first and then look for that retracement? Does that make sense to everyone? It just saves a lot of time. It saves a lot of hassle. So we don't draw out the lines yet. Perfect. Amazing. So can anybody tell me if we're breaking 50% or if we're still within the 50% of the impulsive move? So this is the pole, remember? This is the pole of the flag. Are we still within that 50%? Within? Perfect. Okay. Yes, amazing. Yeah, so as you can see here, the ruler gives us our 50% anyway. So it's well within that 50%. Okay, so now we can move on to draw up the trend, the line for the consolidation. It is going to be rough, so just bear with me. I think it might be a bit easier if we drop down to a smaller time frame. So feel free to do that if you're ever looking for these patterns, and you do see a strong impulsive move, and you do notice that the trend is bullish. If you're looking for a bullish flag, feel free to drop into a smaller time frame to sort of establish the flag as well. Perfect. So, okay, so let me just do that again. Perfect. So when you're looking for that 50% for the retracement, right? What you want to do is you want to take the ruler from TradingView, right? You want to come from the start of your impulsive move. So right there, you want to bring it right to the top of the move. And then this line right here, the ruler already gives you the 50% ruler, the line. So the retracement is just here. It doesn't go nowhere near the 50%. Does that make sense? I hope that made sense. Perfect, no problem. Right, so I'm going to drop down to 50%. Right, so July 27th. Drop down to 15 minutes, right? July 27th. I'm not sure if this was going to go back to that far back. to July. Maybe. I don't think it will. Let's see. It was a really good pattern. So it would be a shame if we couldn't go that far back. No, okay. It's not gonna let me. I might have to just draw it up with on the hour time frame.
I think I know a way of how you could go back further.
Yeah, how do you do that?
So if you click on replay,
Replay, yeah.
go as far back as you can now.
Wait, I'll have to do it on the 15 minutes. The July.
Wait. Okay, so yeah, select any of these bars now.
Yeah.
Does it not work?
No, it doesn't work. It's because I need the full version.
All right, okay.
Thank you, Osman. I appreciate that. So let's have a look. Let's just do it on the hour time frame.
Did you click on the bar then?
Yeah.
All
Yeah.
right, okay.
So July 27th or 21st. There it is, 27th. Perfect. So let's quickly draw this out. Let me just make this thing. Let me change the color of that as well. Be easier to see. Perfect. And when you're drawing up your support and resistance lines for this, there's a little technique. Let me have a look if I can do it. Yeah, if you hold Shift and Control, it does let you sort of maneuver the lines a lot better. So Control and Shift, or just Control. Perfect. Right, so once you've got your support and resistance lines placed, what you want to do is then we're looking for that breakout at that point. So the breakout, as you can see, it happened here. I'm sure if we was to, it's a shame that I can't drop into a lower time frame. Would be ideal. Let me just try it one more time on the 30 minutes. See if we can see. I'm sure we can do it on the 30 minutes. Yeah, there it is. Perfect. So that looks a lot better for to draw up the flag, just so you can get it more precise. So we did break out here. There more than likely was a retest on a lower time frame, but we can't see it, unfortunately. But what you want to do is once you have that breakout, then you want to drop to a lower time frame, so 15 minutes, and you look for the retest, and then you can enter on the retest, okay? And then can anybody tell me how we set our take profit for, and where we set our stop loss? Can anybody pop in the chat where we set our stop loss and our take profit? So we already know our entry. Our entry is on the retest or the breakout, that impulsive breakout. Can anybody pop in the chat where we set our stop loss and how we set our take profit? So with our stop loss, again, we're placing it behind the support, the previous support. Okay, so we want to place our stop loss right here. Okay, so this would be the stop loss. And then for your take profit, what we want to do, so let me just change that because it's in the way. Let's do right side. Perfect. So what you want to do is you want to calculate the impulsive move. So let's do the calculation quickly. So to do the calculation, again, let's use the ruler. Let's keep it simple. Come from the bottom of the move, the impulsive move, to the top. So it's around 140 pips. So then we can measure that on the time frame. So let's have a look, 140 pips. So then what we can do is once we enter this, can anybody tell me where we're measuring the take profit from? So where are we measuring this take profit from? Can anybody pop that in the chat? It's very simple. From the top of the flag, perfect. So from the breakout, right? Yeah, from the breakout. So the breakout, let's just say it was right there. Because 140 pips is quite a lot, just gonna put there. Okay, 140 pips, so 88.18. 88.173. Let's just do that. Oh, it's bang on. Perfect. Let's go back into the hour time frame. There we go. Okay. It did take a very long time for it to come to that. Let's change this. We'll take profit. Again, when you're doing this as well, so the good thing about this is it didn't hit the stop loss, right? That's the really good thing about it. It did sort of take off and it stayed in profit majority of the time. So if we come to the entry point, which is right here, it did go into drawdown a couple of times. However, it did stay in profit for quite a long time. This isn't the ideal trade, in all honesty. The reason being is if you look at how long it took to hit take profit, of course you can take partials and move your stop loss, etc. However, it did take July. Is that July? Yeah, July. It took about 2 weeks, 3 weeks for it to take profit. So that's not the ideal one. But that's, you know, that's how you measure the take profit at that point. 140 pips, to be honest with you, is quite a lot. So again, if you're going for, if you have a structured sort of risk management and you know you're structuring your trades, so you have a good sort of trading style. So for example, most of the time we're setting a 30 pip stop loss. Most of the time we're either doing a 30 pip or 50 pip take profit for the first one, and then 100 pip or 90 pip for the second one. So that would easily have hit, you know, 30 pips or even the 50 pip mark. Right there. Perfect. So let's have a look for another demonstration. Let's try and look at one closer to today's date. I think I'm just going to use this one as an example, the one that I found previously. just so we can look at that retest and see, you know, just how well it actually did. So let's see. Let's go with July. Let's use this because it is a good demonstration actually. Let's see, because we had the breakout, had a little bit of retracement there, but we did have more of a retracement here. So again, the first characteristic, let's go from the low to the high. The first point that we're looking for, making sure that the retracement does not break to 50%. So the flag, right? So the flag. So we've got the pull right here, 50% is marked just here. And then we have the flag, the retracement, which does not break to 50%. So that's the first thing that we're looking for to save time. Now what we want to do is we want to place that our support and resistance lines. So we can get a trend line going, and then we can place it. This breakout was quite strong. Let's see. Let me drop down to 15 minutes. So this is the 20th of September. Perfect. This is actually a better demonstration, although it does look like news hit. What time is this? Wednesday. Let's see. So I would personally place my support and resistance lines right here. So you have to keep in mind, because we are looking at a lower time frame, you have to keep that in mind as well. So let's do, that's the support. That is the resistance right there, the resistance line. Then we have the breakout right here. Right. And then we want to place our entry line. So once you have your breakout, again, you can wait for that retest. However, you can enter on that impulsive move. One thing that I do want to double check is the volume, how the volume looks at that breakout. So it doesn't spike that much in the breakout. Okay, let's get rid of that. Perfect. The good news is it did retest. It did retest right here, which is good. So let's pop that down as the entry. Perfect. And then we can set our stop loss behind the support again. Change the color to red. Perfect. So you've got your perfect entry here. Your stop loss pop down there. And then you're waiting for that retest. Okay. And it did retest really well on this one. And then it did shoot off. So that's a good thing about these patterns. The last one that we looked at, it took 3 weeks for it to take profit. But with this one, if we measure this out from the high to from the low to the high, that's 63.8. So let's go to our entry right here, 63.8. So it would have easily hit that 63.8 right there. Then get our line, pop it there. Perfect. And that is our take profit. Perfect. Does that make sense to everyone? That is actually a better demonstration than the previous one, because we're able to drop down to a lower time frame as well. Does that make sense to everybody? Does anybody have any questions? You can use the currency strength meter, of course. If you want to incorporate that into your trading strategy, that's good. You can use this for scalping, of course. Although there are better patterns out there for scalping. This one is more of like, it's because the take profit is set. I'm guessing you could scalp from, you know, the retest. You could scalp a little bit between this point. But ideally you do want to use a different pattern for that. Okay, so with regards to currencies, or currency pairs, the main one that I use is Euro USD. I'm just getting used to Euro USD. I'm going into gold as well, trading gold. Although I don't trade gold that frequently because it has a different sort of value than the rest of the currencies. It has a higher value. So that means that your risk management is a whole different sort of ball game. It's a whole different sort of, you know, you need to be able to understand gold, the way it works with risk management a lot more. Whereas with the other currency pairs, more often than not, when you're setting sort of like 10 pips, 20 pips, 30 pips, you know roughly how much you can gain and how much you can lose. So, you know, it all comes back to sort of risk management. If the reason you pick a currency pair is so you can become used to the currency pair, how to trade it, and again, to make money off of it. If gold is too volatile, which a lot of the time it can be, sorry, I just hit a button there. A lot of the time it can be, then that's not your currency pair. You want to stay away from that. Where's it gone? That's fine. So yeah, you want to stay away from that if it's not, you know, the best pair for you. When you come to pick a currency pair, again, it can depend on the session you're trading. So I usually trade between the hours of the best time for me personally. I trade between the hours of sort of 8 and 12. I just find that there's the setups play out at that point. There's a lot more that plays out between those hours. The New York kill zone as well, between 1:30 and 4:00. Sometimes I set 1 or 2 trades. I don't go crazy during that time because most of the time there's a lot of news that comes out during that time. So what other questions do we have? Time frame for most of my entries are lower time frame because it gives you a better entry. Because most of the time I am looking for retests. So retests usually, you know, you can see them a lot clearer on a lower time frame. Average duration does vary depending on what I'm looking at. So for example, if it was gold, sometimes the trades can last maybe an hour. Whereas Euro USD, it can take up to sort of like 3-4 hours for the trade to play out. But again, it depends on your style of trading as well. If you're a scalper or intraday swing trader, it does depend on all of those factors as well. That's fine. I can pop the recording into the chat. That's not a problem. If someone entered, if anybody entered late, I'll pop the link in the chat again for the the Telegram group. So you can join that. I can have a look at gold, yeah, that's fine. Yeah, I can look at a scalping pattern. That's completely fine. Perfect. I think that's most of the questions. Yeah, that's most of the questions done. Let's jump into gold. This will be the last one that I look at today until our next session. Let's do a different, let me clear this first of all. Let's look at a bearish demonstration this time. That looks pretty good. This is quite a small one, actually. Let's look for a different one. Yeah, and when you're looking for these patterns, it will come with time, like identifying the pattern itself before it forms. It'll all come with time. You're probably not going to, although having said that, whenever I sort of learn how to trade these patterns or how the patterns actually worked, I did spot most of them straight away. And then I got to the point where it was like, okay, what do I do now? Like, what am I looking for after seeing these patterns? What's next? Which is what I always used to struggle with. But then, it's just a matter of going away from the charts and refreshing and then coming back and maybe looking at a different currency pair. That's why it's good to have maybe 2 or 3 currency pairs that you look at. So if you're looking at the same currency pair all the time, you might just get like a block, and you might just come to a point where you're not really sure what it's doing. So it's always good to have different sort of currency pairs to look for, to look through. Like for example, I'm seeing a lot of bullish continuation patterns, flag patterns. I'm finding it hard to identify the bearish ones. I can see something here, but it's not quite the ideal. Like the impulsive move here, it's really sluggish for me. It doesn't really look like it's the best. Let's drop to a higher time frame and see how that looks. Okay, that looks a lot better actually. So you've got the impulsive move here. Let's have a look. So let's place the ruler. So 50% again, it's not broken from this retracement. Let's draw the lines. So we need the trend lines. So that would be your and then this one here. I try to get them exact, but with the patterns, you can never get it like exactly the way you want it to be. So it'll always be rough. Perfect. So we've got the lines placed. So there's the break you can see here. You've got your retracement there. You've got the pull here. So let me just draw it out again. So you've got the pull from here to here. Then you've got the flag that formed. Let me just change that to Change that to green. Perfect. So you got your support there, your resistance. The breakout here. Let's drop to the lower time frame to look for that entry. So you got the breakout, but you don't have a retest. If you're trading this pattern, then obviously you can, get in at the breakout. You can get in straight away at the breakout. Ideally, you do want that retest to give you a better entry. Because when you're entering on market execution, especially with gold, because it moves so quick, you do want, that's not really that great. There is a breakout. There is a slight breakout here, and then the candle closes, and then there's not much of a retest, to be honest with you. So on this demonstration, you would look to get in at the breakout. But again, you just have to go off of what, the market presents you with. It's not always going to present you with a retest. So I wanted to do something quickly. So what's the last step that we do? So let's say we've entered at this point of the breakout. We set our stop loss again. This is a bearish continuation. So let's set the stop loss. And again, when you're setting your stop loss, I just want to point out that because we are on gold, the values are a lot different. So whereas, 30 pips on a different, on USD Chef, let's look at the pip count on here from the entry. It's like 10 pips, 20 pips. So that's, that's not the greatest of risk management. So you want to make sure you are sticking within risk management as well. I guess we could lower this here to this point, and that means you can lower your stop loss right there, which makes it a little bit better. Perfect. And then you have the breakout. We measure our impulsive move from the high to the low. So here, that's quite a bit. That's what's that? 30 pips? 300 pips. I know that gold is calculated a lot differently, a lot more different. So then you set you go to your entry, which is right here. So be 27. Perfect. So it's not exact, but you get the point. And that's our take profit. Perfect. And it hit the take profit straight away as well. Let's have a look. So yeah. Perfect. Does anybody have any questions before we end the session today? I hope everyone got a lot of value out of today's session. If you did, feel free to drop some fire in the chat. Next session, with regards to the pattern, let's have a look. We'll be doing the pennant pattern next session. And we'll go through that, and I'll take you guys through, the characteristics to look for, how to enter, where to set your take profit, etc. Perfect. I appreciate you guys for joining. I really do appreciate. I think we had about 20 people on the call, so I'm really grateful for you guys that took your time out to jump on the session today. And hope you have a good week trading. Remember to stick to risk management. That's the key to being a successful trader. It's not about how much you can make in one day. It's about how much you can how long you can last in the trading industry. because a lot of people, when they talk about, I think it's 5% are successful, or something ridiculous. The other 95% they quit because they're not in the game long enough. So make sure you're in the game long enough to, to see yourself become successful. I appreciate everybody for joining, and I hope you enjoy the rest of your evening. Take care, guys. Speak to you soon.